To Midcap radar, infra stocks have been in focus through the day today. L&T is amongst the top Nifty gainers on the back of the big infra push that has been announced by Finance Minister Nirmala Sitharaman last evening. So Anisha tracks infra very, very closely. Anisha, what are the details of this big plan?
Well, it was a New Year gift for all the infrastructure companies because they are looking to spend 102 lakh crores on infrastructure over the next 5 years, and it is going to be front-ended. This is something that the Finance Minister as well as the Prime Minister has been telling us. Now, if you look at the bar charts which should come for you on your screen, it looks like the investment is going to peak out in FY21 and 22, where they are looking at a spend of over 19 lakh crores. The focus continues to be on energy, urban infrastructure, roads as well as railways, because these four sectors actually form 70% of the intended spend of the government. Other than that, also the government talked about a lot of large sector reforms in terms of bringing more funding, making available to the private players, as well as easing all the distribution and dispute resolution, etc. So they talk about revitalization of the bond and credit markets, and this is something they are doing through a credit enhancement fund. They talk about ensuring sanctity and enforcement of contracts, because remember, there has been a lot of to and fro after what happened in Andhra Pradesh and Maharashtra state as well. They talk about institutionalization and efficiency of dispute resolution, as well as revitalization of asset monetization, and all of this is being done basically to deleverage the balance sheet of NHAI as well as the private players, so that they free up the capital to use it for more infrastructure creation going forward. We had a word with a couple of managements earlier in the day and also a lot of sector experts. Their idea was that of course this is a move in the right direction, but the main problem remains regarding delay in payments from state and the centre governments, as well as land acquisition, etc. continues to be a worrying point. The biggest challenge for the sector currently is the fact that the funding that has been really made available from the banks continue to be very, very bleak, and the banks are having a sort of risk aversion in terms of lending to the infrastructure sector. So Sumera, we'll watch out for in terms of how really the funding thing pans out, but of course it's a move in the right direction.
That's true actually, but this morning also we spoke with NCC's YD Murthy, and he says that some challenges still remain, and amongst them the biggest is the delay in payments, which continues to be a chronic problem for the sector.
Banks are very reluctant to provide these long-term bank guarantee limits for various construction companies. And private sector banks, actually, they look it as a big risk. They are not at all participating. And public sector banks have already got a big exposure to many of these companies, and they don't want to add to that exposure. So this is quite a big problem right now. When a work is done and the bill is submitted and bill is certified, there should not be any further delay in payment of those bills. That creates a lot of problem, and also it hurts the economic cycle also.
Well, let's stick with the theme of infrastructure, because to understand the roadmap for power sector and discuss the challenges, we had a conversation with Power Secretary Sanjeev Nandan Sahai, who told us that he basically thinks that the focus going forward is going to be on distribution space, and that they're working on a discom package to really help the overdues that we have been seeing in 1 month itself.
The bulk of the investment will be in distribution, which will be about 4 lakh crores, about 3 lakh crore in transmission, and about 2 lakh crore in generation in the next 5 years. Also bringing out a distribution reform scheme which is focused on institutional reforms and incentivizing the discoms to adopt institutional reforms, which essentially is going to look at private participation in different forms. We are working out on a package which will help discoms reduce the past dues to the generators. If that doesn't happen, the generation sector will be, will be stressed. We have to do that, and we are going to do that very soon. The peaks jump, it pulls the demand. So I expect the demand to come up in January.
Okay, and we also spoke with Raj Kiran Rai, the CEO of Union Bank, and Sunil Srivastava, former Deputy MD of Stressed Assets at SBI, to know what they make of the government's mega infra push.
I think retail will never give us the kind of the push what we need in the credit, because like if you look at the housing loan portfolios and all that, they're all between 15 to 20% of the book. So infra as such actually like pushes a lot of other credit also. So but for us it is around 11% of the book. But then we are not shrunk that book. It is only because of certain recoveries and all that, and maybe write-offs, the book is shrinking. But otherwise, we are taking fresh exposure. And see, this is the only area we are getting certain large credit proposals. Despite our push, actually the investment in bonds is not happening across the spectrum.
It's indeed a laudable effort to actually collate all the projects, both in the economic and the social sectors which are available. But the key point is, and they have also recognized why it's, most of the infrastructure sectors projects have actually gone beyond cost and time overruns. The reasons for that, it's a very pious intent. What would inspire the confidence for participation from the private sector, including funds from outside, would be the certainty and predictability of cash flows.
Okay, moving on now, let's shift focus to a CNBC-TV18 exclusive. In what looks like the first M&A deal of 2020, sources tell us that Adani Ports is looking to acquire 72% stake in Krishnapatnam Port from existing investor CVR Group. Nimesh is joining us with all the details. Nimesh, good afternoon. Tell us, what are you picking up?
This could indeed be the first large M&A transaction of 2020. And I understand that Adani Port is very, very close to acquiring Krishnapatnam Port. They are basically going to acquire 72% stake from the existing promoters at an enterprise value of close to 12,500 crores. Now, that would mean that they're valuing the deal at close to 10 times EV/EBITDA on the current year earnings of Krishnapatnam Port. With this acquisition, not only they increase the foothold into the East Coast, but Adani Port will become will be controlling close to 1/3 of the volumes of port business in India. A word on Krishnapatnam Port, it's the second largest private port in India after Mudra Port, and they manage close to 40 million tons of cargo across 10 terminals. Officially, Adani Port has declined to comment to our story, but what I understand is this deal is going to get closed very soon. Post the transaction, Adani Port will manage close to 350 million tons of cargo. Now, that's been their long target for FY20, that they wanted to achieve close to 400 million tons of cargo by FY20. So with this acquisition, they'll be probably very close to achieving that target. And as I said earlier, it's going to be EPS accretive deal simply because they're buying at 10 times EV/EBITDA on current earnings for Krishnapatnam Port.
Nimesh, thanks very much for that big story. Also, another big stock in focus is Dishman Carbage. And remember, this has been in the news for the last many days on the back of, some search operations by the IT department. And this morning, there were some reports that the IT department may have found a trail of unaccounted cash. We spoke with the management this morning as well, and they said that they have not received any communication on this. But my colleague Ekta is here to summarize all that has happened with Dishman. Ekta.
Well, with regards to the IT raids, we have been following this story for quite a while with regards to Dishman. So remember that the IT department did conduct searches of starting 19th of December, and it went on for 7 days. Now, after that, the company did hold a call with institutional investors to assuage concerns as well. Now, there was a fresh report, however, which is indicating that the IT department has claimed to find a trail of unaccounted cash of more than 160 crores. The total cash trail, as per the report in this case, is 327 crores. The team has also found and seized valuables worth around 1.39 crores. The department has collected evidence of bogus loans, advances, purchase transactions, commissions, etc. Senior management and record keepers have admitted to dealing in accommodation entries for unaccounted cash, and a CA firm in Ahmedabad is also under the scanner. There are apparently, the reports indicate, forged transactions and property dealings could connect the company to a previous case, and there has been a goodwill issue which has come up time and again with regards to the merger which took place with Dishman and Carbage AMSYS a couple of quarters ago. And with regards to that, the goodwill of 1326 crores as per the report was showed at that time of the merger and has been claimed at around 900 odd crores. So the company, however, has said that they have not received any sort of communication from the IT department, and none of the statements talk about unaccounted cash according to them, and the cash withdrawn are from accounts of cash paid money. They have full justification for the transactions. So that's the justification coming in from the management. We in fact spoke to them. Let's listen in to what they had to say.
There was one which happened 2 weeks back, and afterward nobody has come or contacted. It is a surprise to me because there has been no communication, no letter, no one-to-one chat. They have to send me the statement because we have verbally whatever we have to say during the statement. We have told them none of the statement says about this money. Cash withdrawal are all from the cash drawn from the accounts of tax-paid money.
And before we head into a break here, something that you, our viewers, should take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. Quite often, hard-earned money gets lost by uninformed investors because they dabble in penny stocks. So what are penny stocks? Well, they are the less researched stocks with little credible research on their fundamentals. Moreover, these can be manipulated by unscrupulous operators. So unless you have convincing reasons, you are better off investing in well-researched large cap, mid or small cap stocks. Don't get lured by the performance of these stocks without understanding their history. Never trust random, unverified sources that urge you to buy an unknown penny stock. And as its name suggests, it is worth just a few pennies.